Give me 1 second.
Take your time.
It's downloading. And start the meeting.
All right. It is 12:03. I'll call the meeting to order. We'll do a roll call vote, please.
Mayor Alorza,
Present.
Vice Chairman Lombardi,
We can't hear you. Sherry?
Sherry, you're unmuted.
can you hear me?
Now we can,
Now.
yes.
Oh, we could.
Okay, all right, all set. Sorry about that. Ms. Silveria?
Present.
Mr. Costello?
Here, yep,
Mr. Hirsch?
here.
Here,
Mr. Winkleman?
Here?
We have 5 present and 2 absent. We have a quorum.
All right, great. Well, thank you, Sherry. And thank you, everybody, for being here today. Once again, I really appreciate everybody's time and energy that you give to this commission. If it weren't for all of the volunteers and essentially volunteers that we have working on our boards and commissions, much of the city's business wouldn't be able to function. So, thank you very much for everything that you do to help us move our city forward every day. All right, we'll go to investment performance analysis, the first item on the agenda. I'll pass it over to you, Eric.
Thanks, Mayor. Can everyone hear me?
yes,
Yes.
Thanks, everyone. It's good to hear from you. And if following our standard practice, if you would turn to your first page of current estimated investment position for the plan, we'll update you and go through what's been happening quickly. We have had, simply put, an enormous rally in the markets since our last meeting. As you can see from your flash, because of the nature of the early intra-month meeting, we have updated you since showing you what has happened since October 31st through Friday, which is our standard practice. You see, we've made 11.3% since that time, putting us up now into the positive almost 5%, as you can see. Several reasons for that. One, of course, some very good news on the pandemic with two great pieces of data from Pfizer and Moderna on the vaccine. Those are highly effective, so markets are pricing in that. They are also pricing in the outcome of the election. They're very happy with that outcome. Going forward, perhaps more normal relations with our allies and China, etc. Some more stimulus is being priced in, although there's still some bickering going on down in Washington, but that looks like that will be coming, and markets are pricing that in. So if you sort of combine the good news on the vaccines with the outcome of the election and stimulus hopes coming, with still, of course, very, very strong stimulus from the Federal Reserve, which could in fact be increased relatively soon. We'll see. Maybe not right away, but they may even increase that stimulus. That's what's driving all of these huge numbers that you see for the period to date on your page. So markets up big. You see your large cap exposure and your small cap domestic, mid and small cap domestic exposure up very large. Total domestic equity up 18% in that time. You'll also notice that value has made a comeback and is catching up. Still a long way to go, but is catching up versus growth, and it has been outperforming lately. That's some good news. And again, we're in this environment where, for example, the return on the S&P 500 in the month of November was the strongest monthly return for the S&P 500 since August of 1984, and it's in the top 10 since in the last 50 years. So that's just how strong November was, and you see it throughout your portfolio. Fixed income is having a great year as well. You see that Loomis is up 7.7 year to date. Treasuries are up 7.3. Our total domestic fixed income is up 7.6%. That's pretty darn good. And our international is doing well as well. So getting some good value on fixed income and equity, both domestic and foreign. If you were to look at, say, Brandis, our deep value manager, our international manager, up 25.7% since November 1st. Still in the negative, of course, but really coming back very quickly. And again, it's just some unprecedented numbers that we're seeing lately. So overall, the portfolio is behaving very well lately, as you can see, and we have jumped into the positive. Now, there'll still be some volatility, I think, going forward. I think the next issue the market will be focusing on is actually getting this spending bill in Washington. Of course, we need an ongoing spending bill. They've given themselves a week extra to do that. But inside that spending bill is hopefully going to be the next COVID relief package with some unemployment benefits, perhaps, we don't know, some direct stimulus checks, perhaps some aid for the states, of course, and other things. There's still a good fight going on over a couple of the details down there, but markets are believing that at least something in the range of $750 billion to $1 trillion will get done, which is quite large in an absolute sense. Not as big as maybe it would have been predicting a few months ago, but still something quite big, and that's helping to drive markets. We also have the Georgia runoff elections on January 5th. Depending on how those come out, could cause volatility in the markets. It would be offsetting forces. If the Democrats were able to pick up those two seats, then of course it would be 50-50, and Vice President-elect Harris would cast the tie-breaking vote, and therefore you might get a much larger stimulus going forward, which markets would like. You might also get higher taxes on corporations, etc., which markets wouldn't like. So there would be various offsetting effects there. So we'll have to wait and see how that turns out. But as far as a review and where we are now, things have been extremely strong since our last meeting. And I happen to think next year is also going to be a good year. I think the economy is going to be quite strong next year, although weakening as we speak because of the increase, the sharp increase in the caseload around the country and hospitalizations, etc. You're starting to see that in the economic data. There have been some additional restrictions put back on really all across the country. You're starting to see that in some of the data. This morning's jobless claims were actually up somewhat for the first time back since the beginning of the pandemic. So that's not good. You'll see some negative effects on the data here in the short run for sure, meaning this month, next month, the month after that, that type of thing. But then I think as we get into the spring and summer and the second half of next year, the economy is going to accelerate. Earnings are therefore going to accelerate. And I think markets are going to reflect that. So some of it is being priced in now, but certainly not all of it. So I think there's reason to be optimistic going forward as well. Can I stop there and take any questions, Mayor?
questions? Any comments or questions? Okay, if there are none, I will entertain a motion to accept the investment performance analysis as just delivered by Eric Bertinazzi. Is there a motion on the table?
I have a question.
Okay, so there is a
Sorry.
question. Go ahead.
Okay. I still notice that we're down overall in contributions about $20 million for the year. If you look at the contributions versus the withdrawals, this is what I've been bringing up the last couple months. And, that does concern me for the overall, integrity of a pension fund.
Yeah. So Larry, can you speak to that, please?
I can, Mayor. Thank you. Commissioner Winkleman and fellow commissioners, as explained, I think in one of the last board meetings, the city generally will make advanced earlier contributions when cash flow supports that. In light of the fact that we have been pending the adoption of a city budget, which is predicated on the outstanding state budget. And although they voted out of committee last evening, until we have adoption, I believe on the 18th of December, we believe we'll be safe in terms of pilot funds and other pass-through revenues. But overall, there has still been some loss of revenues associated with pass-through taxes, such as meals and beverage, hotels, parking revenue, where we'd have to make up that loss through expense reduction. With that said, we've done an outstanding job of managing cash to make sure that we've paid essential expenses only. And we did put $10 million of advance payment in August. But what we did do is last Monday, I believe Tuesday, December 1st, we completed the final payment under the outstanding fiscal year 20 pension obligation, which was down to about 20 million left. We used the cash to do that so that we could have it completed before our order is issued by the December 31st deadline. We had been paying it steady with the receipt of monthly installments of pilot money from the state. So with that, Commissioner Winkleman, that has had an impact on our decision-making because it's tied to cash flow. We had to be certain that we had sufficiency of cash to make sure that we honor debt service, school appropriation, and the like. As I told Mr. Bertinazzi earlier, we might see a return to additional early payments sometime with the third quarter collection when it begins in January, but probably not before December. We did put 20 million in that was expected to pay off. There was a large payout in December. In addition to the regular monthly pension distribution, there was a retroactive settlement payment that was agreed upon by the city with the court. It was a COLA payment that was due to the police. That was about $4 million. That was decided that it would be paid by year end. It did. And so that had an unusual uptick in the amount of payout. Those two combinations have shown why there hasn't been as many contribution dollars to be available for investing. But as soon as we close out calendar 20 and move into the new calendar year, which is the third quarter of the fiscal year, we should be able to set aside, I would think, 10, perhaps 20 million additional into the pension plan so that we could cut down on the amount that would be due by the time we get to the end of June 30.
So does that mean that next year we'll see an increase over this amount?
You mean an increase in additional contributions?
Yes.
Well, we have an obligation.
I hear everything, but it's still, when it all comes down, I see 20 million down, and that concerns me. I'm just saying that,
Yeah, I wouldn't say it's 20 million down. I would just say that there's been an intentional planning of cash strategically in order to preserve cash as we need it because of the uncertainty of our own adopted budget and also state and federal. As soon as that's in line, and I think that'll all be in line by the end of December, first few weeks in January, we'll be back on a steadier path to make sure that we can appropriate steadier contributions back into the pension plan and pension trustee, all in an attempt to pay its 100% pension contribution between the end of June 30 and the first few weeks of July when the state sends us our next round of pilot funding.
Okay.
Larry, to follow up with your last comment, what is the actuarially minimum amount that they're telling us or recommending we pay annually into the pension?
Well, currently, I believe it's 83 million is the annual contribution of all work components, city, general fund, school, and
Okay.
water. It's at 83 million currently, and then that'll increase by the amount required by the actuarial determined contribution each year over the next 20 years.
Yeah, I understand. So that's a fixed liability of the city to meet our minimum funding requirements of the pension.
That is correct.
Thank you.
Thank you, Dave.
Mr.
Mr.
Chairman, may I have a follow-up question on that?
Of course.
Thank you. Mr. Mancini, did we have to pay any interest because of late payments to the pension contribution? And if so, how much and how much per month?
Yeah, so, Mr. Chairman, good afternoon. So based upon the outstanding balance was approximately 30.5 million at June 30. We would normally have received our pilot payment from the state somewhere around the middle of July, which would have been close to 34 million. We would have extinguished that payment in its entirety. This year, because of the uncertainty of the state budget and of course no adoption of the city budget, we didn't learn until the last day of August that the state would then be operating under the provisions of state statute known as continuing authority. When that happens, they pay 1/12 per month of the prior approved appropriation, which was the 34 million. So starting in August, we received 2.8 million a month, which the finance department immediately directed even those payments immediately over to the pension plan. Nonetheless, with that provision, and based upon the period from July 1 through the payment date of, I believe, December 1, when we sent them the balance of 20 million, which was what we could afford, I believe it was close to $600,000+ of interest added. However, Mr. Chairman, we were fortunate enough to have earned in excess of 2.2 million in the immediate preceding prior year of additional interest on deposits that helped offset that impact.
And then with the advent of the proposed budget from last night, does the state, I guess they're proposing now to make that the finish up, give us the full, what's left of that 30 some odd million?
That is correct.
Give a full payment?
That is correct.
Come January, hopefully, or February, or when do they expect to give? I guess what would that be? Roughly what? 2, 4, 6, 8, maybe. What about maybe? Is it about like 15 to 16 million they owe or something like that?
I believe it's close to, with the payment that we receive, if we get a December payment, if they plan to continue with the 1/12 payment for December while they ready the budget. I understand the budget will take up for a vote on the 18th of December. By the time state administration departments can ready their cash flow in adjustment with the budget, we may not see the balance payment till January. If that occurs, we would have received 6/12, so 1/2 of the amount. We would have received 17 million. Therefore, they would owe us an additional 17 million in one shot in the month of January.
And it's our expectation that they pass that budget, they will give us that full payment, or are you getting any signs or inclination to saying, well, we're going to give you the 16 million, but yeah, we're only going to give you, we're going to keep it at 2.8 per month, or we're only going to give you half? You know what I'm saying? Are they giving us any kind of signal?
Yeah, no knowledge certain. We are checking on that, but from everything I've heard from our representatives at the State House and our advisors who attend legislative sessions, that it more than likely would be paid in one payment. More than likely. I think there were comments made today in the news that incoming Speaker Sakachi indicated that it would be meant to help cities and towns almost immediately.
And so then we would if we get that one payment, then we would just do a direct payment to the pension account, correct?
We should be able to afford that immediately, correct?
Thank you, Mr. Mancini.
Thank you, Mr. Chairman. Mayor, I believe
Sherry, you're muted.
Man, I was
Sherry,
saying
you're muted.
stuff too. Y'all missed it. Thank you.
Yeah, everybody's set.
So if you have any, if there are any other questions for Mr. Bertozzi, any other comments? All right, I will entertain a motion to accept the investment performance analysis as given by Mr. Bertozzi. Is there a motion on the table?
So moved.
A move by Commissioner Winkleman. Is there a second?
Second.
Seconded by Commissioner Igliozzi. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed? Okay. The ayes have it, the motion carries, and the investment performance analysis is approved. So we're going to move on to matter number 2, a discussion and or decision relative to the rebalancing of the portfolio. I'll hand it back to you, Eric.
Thank you, Mayor. If you will turn to pages 9 and 10 of your report, you will see our standard procedure with respect to a rebalancing. Page 9 is just sort of the words. Page 10 is the spreadsheet, if you'd like to start there. And you'll see on page 10, as Mr. Mancini was pointing out earlier, we have taken into account for this rebalancing a $12 million withdrawal from the portfolio, which is to happen this month, according to what we've been directed by the city. So we have taken that into account and come up with the following rebalancing recommendation. So after paying out that 12 million, take another 9.5 million from our cash and add that to our bond managers. Again, they've been drawing down, paying 7 million a month for benefits, and rebalance our equity managers down towards their target. And you can see these are the round numbers that we're recommending for rebalancing out of our equity. That gets them all to within, a few tenths of their target. And then 15 million would go to Loomis Sales, 15.1. We would add 3.15 million to the intermediate term treasury and 350,000 to the international bond. So a total of 18.6 million would be added to fixed income. We would end up being about 0.6% overweight, but that would only last for a matter of weeks, because next month another 7 million at least would go out the door. So that's sort of what our standard procedure is. So this is our recommended rebalancing based on everything that we have discussed, with the large cash inflow that Mr. Mancini was referencing. This is how we would rebalance the portfolio back towards target. And I'll take any questions if they're out there.
Questions or comments?
Yeah, I have a question, Eric. Why, in the case of the Vanguard Value Index, why not take that money out of Robeco, which is underperforming, and get the guarantee of the market return? And the same, not Robeco, out of Columbia. The same $1 million. Why take that out of the Vanguard Small Cap Index Fund? That should come out of Robeco, looking at their performance, and would be guaranteed the market return.
Well, we still leave Vanguard Value with this recommendation over the target of 0.1, and we still leave Columbia under target minus 0.6. That's all. So traditionally, we just move all exposures to target within several basis points, within a few tenths of 1%.
Yeah, but Eric,
That's really
the asset class, not how we're going to implement it. As long as the total is correct, and we're seeing underperformance, why not use that as an opportunity to enhance, in my opinion, the quality of our implementation of that asset class?
It could be done. There's no problem. It is in effect a timing decision, which the board usually eschews, but it could easily be done, and you could take a little more from. You could actually take some from Columbia and take less from the index fund. But of course, if you get a good ways away from your target, you're taking the implication of doing so. Usually, the board is stuck with its target, but that could be done.
Eric, as I understand it, the target is not, and the policy is not who we're going to pick individually for an asset class. It's the asset class stays within our target percentage. Whether we go all active, all passive, all private in that sector is a matter of implementation.
So each manager, each index fund, each ETF has a target, and then the overall target is there as well. So for example, our total target for equity is 58%. This rebalancing would leave it at 49.4, 1.4 points over the target of the equity asset class.
Maybe you're misunderstanding what I'm saying. Our value target for large cap value is 8%, correct?
That's correct.
Okay. We could do it 4 and 4 if we wanted to. We could do it 1 and 7. It doesn't matter. It's our exposure to the asset class is the real target in the investment policy statement, not how specific funds are used. And what I'm saying is it's an opportunity now to correct some underperformance and get some guaranteed market performance for these and to readjust it. Whether you're off 1/10% to the exact amount or even 0.5% doesn't make any difference. It's a collar.
So David, let me jump in on this. So Eric, can you clarify this, because this is a very question that Commissioner Hirsch raises. So when we do our allocation decisions, do we do our allocation decisions for the entire asset class, or do we actually make our allocation decisions and get much more specific into how we divvy up within the asset class?
We do both, yes. Of course, we've gone much more towards passive in recent years, much larger percentage in passive, but you're predicting when you have active management that you'll add some value across 3, 5, 7, 10 years, et cetera, and that oscillates for sure, as Commissioner Hirsch is pointing out, but the answer is yes. However, in this case, if we wanted to reduce by a certain percentage from Columbia Value Path and add it to Vanguard Value and view the value, large cap value exposure as being more important than the individual weights inside to indexing and active, we could do that. And it would help to ensure that whatever performance is going forward, it would be in fact closer to the index passive return.
Well, let me ask this question. So I'll say that I'm inclined to follow David's recommendation. However, because of the way that we have always operated, it seems as though that's a decision that speaks to the way that we make our allocation decisions. And if that is the case, one, maybe two questions. The first is, should that decision that David is recommending, should that be made as part of a conversation around allocation? And then maybe the second question, or maybe it's part of the same, is, are there other sort of larger policy issues that we would take on as part of this allocation conversation? Meaning, does it just relate to this specific fund that David is referring to, or will the allocation conversation really encompass many other funds?
Well, in this case, what has been done before with respect to, say, some growth exposure back earlier in the year, we allowed growth to be a little bit overvalued. And I was at a previous meeting, maybe 6 months ago or something in that range. And that was what the board decided. So it was a small temporary deviation from the technical limits. And we could do that this time too. We could not reduce from Vanguard Value Index and therefore keep, stay closer to the 8% by you could move some money from Columbia Value to Vanguard and not remove from Vanguard in this case. And because it would be a very small number, you could just do that now without having to wait for an overall asset allocation discussion or decision. So you could achieve that this time if you'd like.
Now, I think if you read the investment policy statement, it does not say that our large cap value target of 8% shall be implemented as follows: Vanguard Value Index, X, Columbia Value Management, Y. So to your question, Mr. Mayor, the implementation of the policy is separate and distinct from maintaining that policy. If we change that, yes, that's a conversation to change our investment policy statement. But if not, we can invest it or recommend, however the proposals come from the manager or other people, how to implement that particular allocation. Am I making myself clear?
Yeah, no, that is clear. I was always under the impression that when we made allocation decisions, we actually made allocation decisions much more in detail than what you're suggesting we need to, and what you're pointing out is indicated in the investor statement. So perhaps I was mistaken in believing that, but if it is the case that this is not at all an allocation decision, then and it's simply a rebalancing decision, then I feel comfortable.
Exactly.
Okay. So help me. So David, just help me with the with the specific recommendation. So you're recommending that we move how much from Columbia?
Take the 350 that
Again?
Wainwright suggested we need for rebalancing, which I don't dispute, but instead of taking that out of the Vanguard Value Index, take it out of the Columbia Value Pack. Number's the same, stays within the same asset class. It's just coming out of a different bucket in the same asset class. And the same thing with regard to taking the small cap value money, right? Our small cap value total allocation target is 10%. I'm not suggesting we change it from 10%. I'm just saying that the amount that manager A has should be reduced. And that's where the cash should come from, not from manager B.
I get it.
That's all.
Okay. So,
Mr. Chairman?
have that. Are there any other questions, comments on this or any other issue? And I'll table this just for a second now, David, see if there are other issues. And if there isn't, I'll just walk through this step by step.
Mr. Chairman? Mr. Mayor?
Yes.
So I just have, I'm not clearly, there's expertise on both sides, and I don't necessarily for or against what Mr. Hirsch is asking to do. I would just ask that if Eric and his team would then just put together, if that's the case, then put together Mr. Hirsch's proposal and just kind of play it out how exactly that would work. And then if they have to come back and say, yes, okay, this is how it does, or is this simply a matter, and I'll defer to Eric and his folks, can we just simply just say, okay, make these changes that Mr. Hirsch mentioned in theory, and this is, I'm the novice in theory, on the fly right now without having a little better understanding. So I don't want to, I'm not saying Mr. Hirsch is wrong or right, I'm going to I'd like to have Eric just to do whatever analysis they need to do. If they have to at all, they can say, that's no problem. We can do it today. So that's why. So I need some guidance from the experts. That's basically where I'm coming from.
I think we all need some guidance from the expert, Councilman. So I hope I'm not eating my words for this, but I believe that this change is simple enough that we can handle it through a motion and an amendment to a motion, and I think that we should be able to handle it that way. unless there
Can-
are other questions or issues that people raise and it starts getting pretty complicated, then we may have to have them rewrite something up and present it to us in writing. But
Mr. Mayor, could I just ask
be able
that
to
then,
handle it.
just Eric, just weigh in on that? And if that's, if it's as simple as you presenting, then I just want Eric and his folks to say, yes, it is, boom, or I just want their feedback, that's all.
Sure. So this is Eric. For the Columbia, for Columbia, we could simply just take 350 from Columbia and not from any from Vanguard Value. The board has done that before. We've done it verbally based on this. That's not a problem. We can just do it, won't require. I think it's more important to rebalance. If you were to ask me, I would rather do that and have the board vote to do the rebalancing now as opposed to waiting to a future meeting.
Yeah, I agree with you.
Yeah, okay. Any other questions or comments on this or any other issue?
Well, the other one is the same thing to do with small cap value. We're going to follow. Councilman Igliozzi, I think maybe an easy way to understand it is to say, look, your wife's giving you 25 cents for your allowance this week. You're going to keep 10 cents in one pocket and 15 in the other, but you don't like the way that feels. You're just going to take the nickel out of your right pocket and put it in your left pocket. Your total exposure is identical. It's 25 cents. It's just you're just shifting how it's being managed.
That's, if, I'll defer to you at your example. Sounds great. Not that I know much about that. The first go round, it didn't work out well for me, so I'm gonna go with that.
You need to ask her for a raise.
So I'm fine. I mean, I just want to make sure, because, everybody brings a lot of expertise to this, and I just want to make sure that I'm supporting and just have the public has the right information where presented on the public has the right information. We have the right information that when I'm making a vote, that everybody understands why we're doing it. That's all I ask. So and if Eric sounds like it's simple, it's not an issue, and what you're proposing seems reasonable to me too. So then I have no problem with that.
Okay. So this is what
So we can do that. We'll do that. We will have this rebalancing, except Vanguard Value will not be subtracted 350. In fact, Columbia will be, and in this instance, instead of taking 1 million from Vanguard Small Cap Value, we would take 1 million from Robeco Boston Partners Small Value.
Great. Okay, so procedurally, this is what I'd like to do. I'd like to enter pages 9 and 10 of the report into the record as official exhibits. And then I'd like to entertain a motion, and we'll spell out the motion that refers to Exhibit 1 that will hopefully be entered into the record by then. And we'll spell out the specific changes to it. All right?
Okay. Can we do the exhibit first, make a motion for the exhibits?
Yep. But before we get to that, I just want to make sure, any other questions or comments on any other issues?
I just had one. Eric, you mentioned a $12 million withdrawal. Was that to be done or was it done?
I believe that is, we have been instructed that it would be being taken on or before the 24th of December. I do not know if it has come out today or not.
Okay, no problem. If it was already done, then I had a question. But since it hasn't been done, I don't have a question. Thanks.
Okay.
All right, excellent. So first things first, I'll entertain a motion to enter pages 9 and 10 of the report as Exhibit A. Is there a motion on the table?
So move.
So moved by Commissioner Winkleman. Is there a second?
Second.
Seconded by Commissioner Igliozzi. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed? All right. So we have Exhibit A entered into the record. And now, David, correct me or help me on this if I don't get it right. So I'll entertain a motion to accept Wainwright's recommendation as documented on Exhibit A with the two following changes. The first is that the reduction in Vanguard value be replaced by a reduction in Columbia. And second, that the under small cap value, that instead of a reduction in Vanguard, that the reduction come from Robeco Boston Partners.
Mhm.
All right.
Perfect.
I'll entertain a motion. Is there a motion on the table?
So moved.
So moved by Commissioner Hirsch. Is there a second?
Second,
Seconded by Commissioner Costello. Any discussion on the motion?
I just want to thank Mr. Hirsch, by the way, and I think this was what do you call it? Really interesting and very great collaborative effort. That's all. Thank you.
Thank you. Sherry, we'll do a roll call vote, please.
Yes, please. Mayor Alorza?
Aye.
Vice Chairman Lombardi is absent. Councilman Igliozzi?
Aye.
Ms. Silveria?
Aye.
Mr. Costello?
Aye.
Mr. Hirsch?
Aye.
Mr. Winkleman?
Aye.
The motion carries.
All right. Excellent. Thank you, everyone. So we'll move on to matter number 3, discussion and or decision relative to, it says invite manager. I believe that means investment manager.
Yes, Mayor. This is Eric here. What we're talking about here is the Point Judith Capital investment. It's a very small remaining investment, just over 200,000. The last remaining investment, the last remaining company that was invested in by Point Judith Capital is those shares, which the fund holds, are being distributed to the investors in the fund because the fund is closing once and for all. It's about it's past its due date. Been around for 12 to 14 years. It's closing, and they are distributing those last remaining shares. The board has about 51,000 shares of this company, Invite Manager, which is a sort of a ticket and experience manager. It's a company that works with, groups going to sporting events, et cetera, that type of thing. You have about a $212,000 remaining position. Those shares are being distributed to all the individual managers. Point Judith is closing the fund and has arranged for an institutional buyer to meet with the investors in the private equity fund in order to sell those shares in that company if those investors wish to do so. Now they'll do it. They'll give you a price which is at a discount. Again, it's not going to move the needle because we're talking, this is 0.06% of the fund. It's about 6 basis points of the fund, but it's on the agenda because we wanted to bring it to your attention. We had discussions with Point Judith Capital, and if the board would like, we, the client, we as your consultant, can talk to the institutional buyer and make arrangements to sell those shares and dispose of them. If you wish, Point Judith Capital tells us that, of course, that buyer will make an offer at a discount to the current value. Current value is that Point Judith is assigning to the shares is $4.09. We don't know what the price per share would be, but if the board would like, we will have discussions with and be introduced to the institutional buyer, and we could come back to you with what they offer. We believe most investors will sell, not all of them. Point Unit Capital, for example, is holding on to their shares, but they are professionals, of course, and they know the company, and they've been involved with the company for years, et cetera. But we believe most will end up selling the shares instead of holding on. You have the choice of holding the shares indefinitely. Point Unit Capital thinks that perhaps in a 3 or 4 or 5 year time period, the company may sell or merge in some way, or there could be another, therefore, opportunity to sell and get out of the shares. But that's what the options are for the board to consider now. And we wanted to bring that to your attention and take your direction as to whether you would like us to meet with the institutional buyer and see what is being offered.
All right. Any questions or comments?
Yeah, I'm an investor in that fund, so I've also been given those shares. So I'm wondering whether I should recuse myself from this.
Yeah, I wouldn't know which way to say. I mean, out of an abundance of caution, you can recuse yourself, Mike. I don't see an obvious conflict, but out of an abundance of caution, it may not hurt.
Well, I defer to the experts, but
Can anyone speak to that? Ken, can you speak to that?
Mayor, I like you said, I mean, without fully analyzing it, I think it'd be best because it would require some type of action that Mike just recuse himself.
I agree.
fine. So I recuse myself from this discussion.
Noted.
Any other questions or comments? Go ahead.
John Winkleman,
Yes.
I see nothing wrong with talking to them and coming back with a recommendation.
Okay. I think that's fair. I also think that there's nothing wrong talking to them. I will say that, so my general inclination on this, we don't gamble, with, it is a gamble, we're talking about one stock, one company. And, we just don't do that throughout our portfolio. So my inclination is that we sell. But with that said, it really isn't that much money. And, it certainly doesn't hurt to talk to them, if they blow us away and, give us, they make an offer that's beyond what we think it's valued for. And, or they lowball us. It's worth doing our due diligence. But I do want to say it's my inclination that, we not hold, individual stocks as part of our portfolio. So Eric, does that guidance work for you? Is that, would that be enough for you at this time that, you have the conversation with the company and come back to us after doing that due diligence?
Oh, yes, that's quite sufficient, and we'll get right on it.
Okay. Any other questions and comments on this? All right. So we will table any decision with respect to invite manager until our next meeting. And Sherry, do you want us to vote to continue this to the next meeting?
Yes, please just make a voice vote to continue to the next meeting, please.
Okay. Can I have a motion to continue matter number 3 until our next meeting?
So moved.
So moved. Second.
Okay. So moved by Commissioner Winkleman, seconded by Commissioner Igliozzi. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed?
And then I'm going to recuse.
Thank you.
Okay, great. We'll move on to matter number 4, discussion relative to the Dexter donation fund and other trust accounts. Eric.
Thank you, Mayor. If you look in your other package, you'll see that we usually start with Dexter donation, page 1 of that book. You'll see that we have a month-to-date return in December of 2.3%, a year-to-date return of 11.9%. Quite a bit of equity in this fund. Again, markets have recovered very strongly. All of the same discussion that we've had earlier applies to understanding the returns in this portfolio and these portfolios as well. So we'd have no further comments on markets or the portfolio. Just a good report, things going in the same positive direction.
Any questions or comments? Okay. If there are no questions or comments, I'll entertain a motion to approve the report given with respect to Dexter Donation Fund and other trust accounts. Is there a motion on the table?
So move.
Moved by Commissioner Winkleman. Is there a second?
Second?
Seconded by Commissioner Igliozzi. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed? All right, the motion carries and we accept the report. Thank you. And I believe that there is nothing to discuss relative to claims and litigation. Is that correct, Ken?
That is correct, Your Honor.
All right, so I'll entertain a motion to continue matter number 5 until our next meeting. Is there a motion?
So move.
So moved by Commissioner Winkleman. Is there a second?
Second?
Seconded by Commissioner Igliozzi. Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? All right, the matter is continued until our next meeting. And I'll entertain a motion to adjourn. Commissioner Winkleman, you've been a busy voice this meeting, so it's only right that you motion for this. Is it your motion?
My motion.
Is there a second?
Second.
Seconded by Commissioner Hirsch. All those in favor, please say aye.
Aye.
Okay.
Any opposed? All right. Ladies and gentlemen, we're adjourned. And, given that this is our last meeting for the year end, I probably won't see you, and we won't see each other in, either in view, in Zoom, or in person between now and the end of the year. I want to wish everyone very happy holidays to you and to your families. Please stay safe out there. And I do want to let you know that on behalf of all of the residents of the city, we truly appreciate your time and energy that you give to this work. So thank you, everyone.
And happy